Hey everyone, welcome back to the channel. Today, we're diving into the Federal Reserve's latest meeting minutes, which just dropped. And let me tell you, there's a lot to unpack here. The minutes show how the Fed is reacting to the current economic climate and the uncertainty surrounding President-elect Donald Trump's policies. So grab a seat and let's break it down. First, let's talk about inflation. The Fed is still concerned about it. They've been lowering interest rates over the past few months, but they're taking a step back now. Why? Well, because inflation is still higher than the Fed's target of 2%. Even though things are improving, inflation in November was running at 2.4% for core inflation and 2.8% if you include food and energy. So the Fed's not exactly out of the woods yet. Now, let's add in the twist of President-elect Trump. The Fed didn't call out Trump directly in their meeting, but they did mention how his planned policies, like aggressive tariffs on countries like China, Mexico, and Canada, could impact the economy. On top of that, Trump wants to deregulate industries and take a tough stance on immigration. All these things create a lot of uncertainty. The Fed's job is to make sure the economy stays stable, and with so many unknowns about how these policies will play out, they've decided to move more cautiously. In fact, the Fed's officials agreed that they need to slow down their interest rate cuts. They lowered the benchmark rate to 4.25%, 4.5% in December, but they've reduced their forecast for future cuts. Instead of expecting 4 rate cuts in 2025, they now think there'll only be 2. And with the economy still growing, they don't want to rush into any more changes. As Fed Chair Jerome Powell put it, it's like driving on a foggy night. You slow down because you can't see everything clearly. The Fed is also concerned about the economy's response to their earlier actions. They've been cutting rates, but they need to assess how those cuts are impacting the economy before making any more drastic moves. In fact, the minutes said that the Fed is now at a point where it could slow down even further. And that's exactly what they plan to do. Inflation is still above their target, but consumer spending is solid and the job market is stable. So they're going to take their time before making any big decisions. Looking ahead, the Fed expects inflation to eventually get back down to 2%, but they're not predicting that to happen until 2027. That's a long way off, and with inflation still higher than they want, they're staying cautious. So what does this all mean for you? Well, the Fed is taking a gradual approach to interest rate cuts, meaning they're not rushing into anything. While the economy is still strong, they're going to wait and see how things develop, especially with all the uncertainties around Trump's policies. The good news is that the economy is still growing, but don't expect interest rates to drop too quickly anytime soon. That's all for today's breakdown. If you found this helpful, hit that like button, and don't forget to subscribe for more updates on the economy and the stock market. See you in the next video.